Are you worried about the economic future in the United States, and is it starting to hold you back from purchasing real estate investments? If so, this is the episode for you because I'm going to be breaking down what would qualify under a air quotes safe investment that might just be a nice conservative route that you can go to still be able to invest in real estate, but temper that risk a little bit during the time of your concerns. So this is a conversation. We actually had an amazing talk a couple days ago in the Lady Landlords Inner Circle, just about how women were feeling right now with what's just going on economically in the United States. And what was very interesting was our inner circle group was actually divided in half about those that were saying, hey, I'm kind of worried about the direction we're going, and it's starting to make me question properties and my strategy and things like that. And then the other half of the group actually still felt very confident with where we're going in an economic direction. So when I asked the people and kind of focused on those that had concerns about where the economy was, I said, well, I know you ladies, you're still planning on buying properties, you're still out there looking at purchases. Why is it that if you have these concerns that you're still saying, I want to move through? And what was really interesting was that the response that I got back overwhelmingly was, I know that good economy or bad economy, that I still need to do me. I still need to take care of my family. I still need to understand my finances, and I still need to be out there investing. Do I feel that there are bigger risks? Do I feel that I'm a little more uncertain about what the economy will look like in the future? What's going to happen with interest rates? Absolutely. Now, listen, none of us have our crystal ball, but one thing that I do feel confident in saying, and this is as a person that has worked in corporate America, that worked in 9 to 5 jobs for 15 plus years, is that I'm sorry, but corporate America is not there to be able to support us anymore. That is not something that we can count on. I'm sorry, but if we're not there, trust me, they're going to find somebody else to replace us and move on. Okay. That's not saying that we might be in a role where we don't feel valued. I've had fantastic jobs where I did feel very valued, where I feel that they actually did care about their employees, where I feel like they did actually care about our interests. I still feel that that's very rare, but I still feel that at the end of the day, a company is still going to do what they need to do to be able to protect themselves. If they literally need to have layoffs because it's either that or going belly up, I'm sorry, they're going to have layoffs. They might like you, but they're still going to lay you off, right? So it's been interesting to see since we started Lady Landlords back in 2020 during a pandemic when also huge wave of people losing their jobs. But now to kind of circle back around to where there's just kind of this uncertainty place and saying, hey, what can we still do? And I love the fact that even these women that are saying, hey, I'm not quite sure. I don't necessarily feel very comfortable with understanding what's going to happen with interest rates this year or what necessarily is going to happen economically, that they still saw and understood the value in real estate investing and taking control of their own finances and having that ability to make a difference in their own finances and in their family finances. And that was something that I thought was just absolutely so cool to see how everybody really united in that space. But here are a few things that you could do if you want to still invest in real estate, but you want to be a little bit more on that conservative side for the time being. One thing to really think about here is the idea of having an owner occupied property, right? A property that you would be living in. Many people, we usually refer to this as house hacking. When you simply have a multifamily house, you live in one unit and you rent out the other units. It's a great way to decrease your own cost of living because you have those other units helping support what your expenses would be. It's a great way to also get your feet wet if you are new to being a lady landlord and see what that experience is like within that. But there's also some great benefits to owner occupied properties. Some of those are really what the terms of your mortgage are going to be. With that, you can actually put less money down. Typically, when you're buying an investment property, you're looking at putting 20-25% as a down payment on that property. With owner occupied financing, you could put 3, you could put 5%, right? You're still going to have to pay mortgage insurance, which isn't a small fee since you put under 20% down, but you're less money out of pocket, right? You also get decreased interest rates when you have an owner occupied property. If you were living in a property, doesn't matter if it's your first property that you're buying or your 50th property you're buying, but if you are buying a property and you're going to live in it, you actually will get lower interest rates than if you were purchasing an investment property, a sole investment property that you would not be living in. Now, the reason that I'm putting this into the category of a little bit more of a safe investment, right, a little bit of a less risky investment, is because it's actually going to be your own home. So it'll be a great way that you would be able to still decrease your cost of living, help depending on what kind of goes on the economy over the next year. If you feel like we're going to still see increased inflation, if you feel that inflation's not going to come down fast enough for you, any of those different things, if you can decrease your cost of living and put more money in your pocket every single month, it might give you a little bit more of that financial security that you are looking for. The other thing that's going to be important about this and why I'm also putting this in a lower risk category is because you will then completely understand and know your numbers of what's going to happen if the other units are not paying their rent. Okay. You can understand, you can control your payment. So that is something that even with that multifamily, if you are concerned about future job loss, about evictions on the rise again, like what we saw back in 2020, this is something that if you're living in that property, it's going to be a little bit easier to then control what your costs are going to be during that time. So that would be really going into this saying, hey, I know that I can afford a mortgage of only $3,000 a month. That is my maximum. I do not want to go over that number. So yes, great. You can have a tenant that'll still be living there and maybe putting in $1,500 every single month. But if there's issues in the future, or if you have problems with tenants not paying, if you have vacancies, if you can't find somebody to rent it, then you already set that limit of what you can afford, and you still actually have your own place to live, right? So at least then you're paying for that space for you to be able to be in, rather than saying, great, now I have to carry an entire other investment property on your own. Okay. The second opportunity of what you could do if you want to be in a little bit of a lower risk category right now is to consider looking to buy out of state. The reason for that is because you might be in a place where you're saying, I live in a high cost of living area, right? I'm over here in New York, right outside of New York City. So that's something that for me, these are very expensive areas to be able to invest in. But you might also be able to say, I'm going to go and I'm going to invest in a place where the sale price is going to be lower, where then therefore I will have a lower monthly payment, right? So once again, just like in my first option here, this is then going to be a space where you can say, hey, I can feel a little bit more comfortable if I don't have paying tenants or if I have vacancies, because you're not looking at a $10,000 mortgage that unfortunately is very common in the New York City area, but really saying, hey, I can afford something that's going to be much cheaper in that space. You might also be able to move to a market where there's a higher demand for rent, meaning that all because you have a lower sale price or a property that has a less overall value, if rents are really high in that market and you could be bringing in a good cash flow from that space, then in that space, you can actually move into a market that's just going to feel a little bit safer. You're going to feel a little bit more comfortable than if you happen to be in a high cost of living market. So you might be sitting there being like, hey, listen, having an extra 10 grand to have a rental property in Westchester, New York, not exactly my cup of tea at this moment in time. But you might be able to say, hey, there might be a place in either the Midwest or the South where maybe if you can have that mortgage payment be only $1,000, somewhere a lot lower, you might feel a little bit more comfortable in case the economy shifts a little bit. Then that way you can say, hey, that's a hit that I can afford to take and get myself through that period of time. The last recommendation that I want to make for you is to spend your time researching. It's incredibly important to understand market research. Now, if you need a little more information about that, we do have an episode all about market research. So feel free to go back and take a listen to that episode. But there are shifts that are happening, as they always do in life. It's now a good time to start to understand what's happening with markets. What I mean by that is right now what we've been seeing in the Washington, D.C. area, Maryland, Virginia, right outside of D.C., is unfortunately you're seeing a lot of people that are having their jobs furloughed, that are being terminated, departments that are being shut down, and that is absolutely changing what the rental market is looking like and what the house buying market is looking like in Washington, D.C. If people don't have jobs, they can't get mortgages, they can't pay their actual mortgage, they can't pay their rent, right? So that you can see kind of what's going on there, but it's also Washington, D.C., right? It's like New York City. People are still always going to live in that area. That's still where our federal government is going to be based. So understanding what's happening in that market and deciding where your risk level can be Is now a good time for you to be able to buy there because you know that in the future, those values are going to go back up? That different people, maybe the private sector comes in and starts taking over some of those jobs that the government had previously held. What is that going to look like? So maybe you're saying it's a great opportunity to kind of get in now when a lot of people are actually leaving that area. Maybe you say, nope, that is absolutely not my risk level that I want to be able to look at. And also, I want to stay once again in a little bit of a lower cost of living area compared to that DC market. You might then want to start doing some research about what's going on with tariffs and the conversation about what might be happening with the United States and other countries. I got to be honest, at the recording of this episode, this might be completely different by the time this is actually released. But right now, there's still a lot of question marks around tariffs. If that does start to have a larger impact as we move through 2025, it might be kind of smart to start looking into some areas about where businesses are going to be relocating. Where are some of the businesses that maybe are in Canada that are thinking about moving to the United States? Where all of a sudden, where are those areas? What businesses are going to be shut down? What businesses might have to move to a different country if they're doing business outside mostly of the United States? So what areas, and there's a lot of rural space still in this country that I do think will turn back to a little bit more of manufacturing hubs. So good opportunity now, if you're not in a position where you want to buy and you want to kind of outweigh what's going to happen throughout of 2025. Start to understand your markets, start to look into these spaces and start to look for your trends and start to look for where people will be moving to versus where people will be moving away from. Great time to do your research or get into some of these lower risk investments. All right. Let me know down in the show notes if any of these are strategies that you're going to be trying, and let me know what questions you have about them. Otherwise, thank you very much for joining me for today's episode of the Lady Landlords Podcast. Please do make sure to hit that subscribe button so you do not miss the next episode of the Lady Landlords Podcast. And if you know another lady that is looking to get into real estate investing, hit that share button, send this link over to somebody else that is really saying, hey, I want to make sure that I can secure financial stability and help them out a little bit by sharing our episode. Thanks so much, and I will see you next week for the next episode of the Lady Landlords Podcast.
Thank you for listening to the Lady Landlords Podcast. If you're feeling stuck in your real estate investing journey, visit lady-landlords.com to book a 15-minute orientation call with me and see if you're ready to join our mentorship program. Or you can subscribe to our newsletter and join our Facebook group for exclusive real estate investing tips and offers. Invest with confidence. Become a Lady Landlord today.